The market's traded higher today, but as you can see, they closed as a doji, which is not unusual right before a 3-day weekend. We don't know what will happen over the weekend, so that's why a lot of people start flattening their positions. But we can see what's still happening in the overall trend. This wave right here hasn't gotten to be the same magnitude as this wave right here, which still implies we're heading up toward the 50-day moving average. On an intraday basis, it wouldn't be surprising to see the market open lower, test the T-line and the 50 with the same trading program or movement that is most likely to happen. When they come up through a resistance level, they come back down to test it to see if it's going to act as support. And if it does, they move things higher. So look for some profit taking, but I would still look for the T-line and the 34 EMA to act as support. Still making the gap up here at the 50 the likely target. The same analysis can be applied to the Nasdaq, also above the 34, not showing any selling yet, not in the overbought condition, still making the probabilities of coming up to test the 200 and the 50 a very likely target. This implies probably the first couple of days of next week to be positive trading. However, because we're going into that 3-day weekend, you can't ever tell what news might be coming out the other side. So it'll be important to see what the pre-market futures tell us on the open Monday. And although the Russians and the Saudi Arabians decided to cut back their production, it either wasn't apparently strong enough for cut back for most investors because it sold off by the end of the day, telling us we may still be in a downtrend and possibly coming back to test the lows again on crude oil. A function of that is also that if everybody's sitting home and not driving, the crude oil supplies keep building up. So that's probably going to put a little bit of weakness in the oil stocks. But the housing stocks still acted well. NAIL, which is the three leveraged ETF, traded higher today and did a doji. Stochastic's coming up. We're right here at a breakout level. If it opens positive on Monday, you can still be buying NAIL, expecting a doji sandwich breakout of this area. The benefit of being able to analyze a bottom pattern, here's a double bottom starting with your doji gap up, staying above the T-line, a possible another doji sandwich breakout, is the magnitude of return on this type of trade. Trading down here at the $14 range, it's already moved up from where we started buying it at 10. But look at the upside potential. There's gaps way up here. Again, if the housing market starts picking back up, which would be a function of people getting out of the lock in your house syndrome, this could have big upside potential, meaning not 5, 10, 15, 20%, but 100, 200, 300% upsides. This is the type of thing that you gain a huge advantage using candlestick signals, because you can tell when the buying starts, and then you can also calculate what might be the upside potential if you're heading in the right direction. And the strength of the housing indexes or ETFs allow us to go find which stocks in those sectors are acting the strongest. Look at our recommendation on MHO, which was a morning star signal, a close above the T-line, followed by a doji sandwich, making a gap up, or filling the gap at the 34 a likely target, and filling the gap near the 50 a likely target. So essentially just reading what the candlestick charts are telling us, this is a strong bullish reversal signal, and we're already alerted to that by the fact that the ETFs in the housing sector are acting strong. That allows us to go find which are the strongest stocks in that sector. And that same scenario can be applied to the clothing sector or the retail sector. Our recommendation on GIII was based upon a Morningstar signal followed by a gap up, now producing another Doji sandwich, making a target up here and a target up here very viable, which means essentially what we're looking for is not only strong signals, but strong signals that can put us into positions where we're not making 3, 5, 10, 12%, but we may be making 20, 40, 60, 80% on the next price moves. That'll be it. We'll see you in the chat rooms.